Jonathan, welcome.
Thank you, Kelly. Good to be here.
Good to have you. Do you want to make a quick comment on that ICE situation? I mean, or what do you think is driving your stock today?
Well, I think we delivered great results on the retail business. We are profitable for the seventh consecutive quarter, and we've taken market share for the second year in a row. But I do think this news of ICE investing in T0 is a big deal. ICE knows how to run markets, knows how to run exchanges, and we've always thought that a blockchain exchange is the exchange of the 21st century. So it's great to have ICE on the cap table, and just as importantly, ICE's chief strategic officer joining T0 as its CEO.
And now on the T0 front, is this something you're going to look to sell out of, or would this remain part of the portfolio?
Well, we've engaged a venture capital firm, Pelion Ventures, which manages our 21 different blockchain investments. That's really a decision for Pelion, but I think the future is bright for T0. This is something that we've been in for a long time, and I suspect we'll be in it for some time to come.
And let's talk about the sort of bread and butter of Overstock.com. Are any of these sort of plans or blockchain exchanges or anything like that going to have a near-term effect on the core business?
No, like I said, we've outsourced the management of the blockchain portfolio to a venture fund, which lets our core management team at Overstock focus on our Dream Homes for All furniture business, which has done well the last 2 years and continues to do well.
So we've spoke the last time that you were on about some of the share gains that you were actually experiencing in the past, even at the expense of the likes of Amazon, because of the different way that you run your supply relationships. You allow people to kind of shop around. They don't have to necessarily be exclusive, and that's given you the product that consumers have generally been looking for. Is the situation improving on the supply chain front as we move into the first quarter of this year?
You know, the supply chain is still a challenge. There's still kinks and bottlenecks in it. We suspect it will stay that way for the better part of 2022. That tends to work well for us with our distributed supplier network and vast partner, suppliers. For us, we continue to grow. We continue to take market share. We think we probably took 50 basis points of market share in 2021 and expect we can keep doing that again this year.
Still, we know it's going to be a tough year or two as you come off those great pandemic numbers. Does that affect the way you run the business, or is it just a known that you have to work through and then look forward to lapping, maybe easier comparisons as we head into 2023?
Well, we hope there's never an easy comparison for us. We hope we're always growing. But you're right. The first quarter is yet another tough year-over-year COVID comparison. Our goal is to take market share, and our goal is to do so profitably. In the fourth quarter, when we saw some of our competitors spend a little, what we thought was recklessly in the online ad space, we backed off to make sure that we turned a profit because we knew that we were growing and we could afford to do that.
Wow. Well, we appreciate the insight and some of the decisions that you're making here. Jonathan, thanks for your time today.